Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. If you picked up on the report from last week, you'll know that I drew this line here. At the beginning of the week, I said we would most likely rally, and then towards the end of the week, we would see a sell-off with the end of the line right there at 342.87 being my target. As you can see, it worked out perfectly, just like that. And now that we have broken back above that 20-period moving average, it looks like down below, the oscillators are starting to pick back up again. Right down here, I'll circle this for you. You can see that the CCI is crossing above the zero line. That's that black line, also known as the momentum line. And generally what we see is a 2 to 4 day move in the direction of that cross. So in this case, I'm expecting 2 to 4 more days of upside. And then we have to worry about that gap right up there. So I think next week we will move up to fill that gap. And then guess what? There's an 80% chance that the markets will pull back from the gap. And that's the general rules for gap trading. It's what I teach for many years, and you'll see, don't take my word for it. All you have to do is go back and look at any chart, and you'll see that for the most part, 80% of the gaps fill, and then what you want to do is look to see what happens after the gaps fill. So that's the diamonds. Now, if we look at the VIX, let's go right to the VIX. I said that would most likely bounce off of this support. That's exactly what happened. And believe it or not, we hit my price target back here from 2 weeks ago. I had since erased that, but we did bounce. Now what's happened is we filled this gap. Now, unlike equities, gaps fill 100% of the time on the VIX. And then it generally reverses. So look what's happened. We have a gap below the market that's now filled here, and that filled today. And we now have a gap above the market that I think will fill. So for next week, because this momentum here is shifting to the downside, see the stochastics almost ready to cross there. The CCI is already crossed with the sell signal. Because of that momentum, I do believe that the VIX will continue just a little bit lower. Again, that will support our idea of a higher market early in the week. And then I think we're going to make a move right back up to fill that gap. And I'll leave it just like that so you can see how it works out for next week. Now that's the VIX. Moving right along with the S&P, ticker symbol SPY right there. I did something a little bit different. I said that I'm going to leave a horizontal line for my long-term forecast, and that's right there. I'm leaving that in place. And I'm going to continue to maintain this idea that we're going to stay in this range for a little while until we hit that target. So on the upside, we have resistance up there at 422.49. We have the momentum shifting to the upside again, opposite of the VIX. We have the CCI down here, almost at a crossover, the momentum line. The stochastics is starting to move back up, so I think that'll drive prices early on in the week higher, and then we'll have to see whether or not we turn back from this resistance. Now, on Sunday evening, for our option traders, I'm putting out the monthly expiration week alert, which will have all the instructions on how to roll the positions, how to collect the cash, how to maintain our spreads, and how to roll with our cash cows known as the Condor spreads. And so that will come out Sunday night. And I'm putting it out while the markets are closed because on Monday morning, if the markets start to move up, I want to at least have all of those prices locked in for our positions. So expect that to come in your mailbox Sunday night. If you're not already a subscriber, then by all means click on one of the links in the description box below and we'll have one of our representatives contact you on what that's all about. So we're having great success with our trading. The markets are trading right in line with the technical signals, and we're very happy with the results so far. Now let's take a look at IWM. I'm going to look at the daily, and then I'm going to switch back to the monthly. Right here, the market, again, is stuck in this range. I think we could still go right back up to test that high, but I'm going to shift that over. And one of the reasons, again, is because we have down below, look, we have the stochastics about to cross. CCI is already crossed. My price target for IWM is going to be up there at 227.75. Now, that is a short-term forecast. My long-term forecast is much more bearish than that. And you can see from the monthly chart here, in the month of May so far, we still have half the month to go, we have what looks like to be a hanging man, which is an extremely bearish candle. Even an engulfing type of a candle here, as it's a hanging man, with significantly lower volume along the way. Again, looking down at the oscillators, you can see that the CCI and the stochastics almost crossing there, the CCI crossing with a sell signal. We have a wide divergence from this moving average. Again, that drop in volume is very significant because that's telling us that the buyers are running out of that upside momentum. So be very careful with any new long positions. If you're a long-term buy-hold investor, I would shift that from being buy and hold to buy and protect. There's a thing called stop-loss orders that could help you on the downside, at least move the cash. There's options plays that you can put on. For instance, like a collar. Learn about what a collar is. It's when you take the market's money and you buy insurance or puts to the downside using the market's money. So these are just some of the ideas that we teach, and hopefully those will help you as well. If we look at the Qs, ticker symbol QQQ, on the monthly chart, again, look what's happening. We have this big red candle here, drop in volume, oscillators shifting. I mean, it's the same story for all markets. As we shift to the daily chart, you can see that this resistance is holding, the support is holding, we're stuck in a range. So what we're going to do, again, because the oscillators are shifting higher, we're going to go right back up and move our forecast lines at least to that 20-period moving average right there. Let me zoom in for you right there. 20-period moving average is right around 333. I'm going to go just a little bit higher than that with my forecast, 333.77. Again, the oscillators downstairs are crossing with a buy signal here, and we have the stochastics just about at a buy signal. So again, it's only short term that I think the markets will rally. Long term, big bear. I'm telling you, I think we're in a very dangerous position. I was looking at a chart today. Take a look at this. The ratio between commodity prices and equities is a significant point right now, because if you look back, we're looking at a 0.596 ratio here, which tells us that the commodity prices are literally running away. That's the threat of inflation. It's not even a threat anymore. It's a reality. And if you look back in the past, you'll see that in the dot-com bubble, we were down below 2 on that ratio. And right now, this is making the tech bubble look like kindergarten play. We're actually looking at bubbles within the bubbles. And if this doesn't get your attention, then I don't know what else will. I'm trying to show each and every week the signals that are pointing us to much lower prices and even a possible collapse of the market. And I don't want anyone to fear that, because obviously if the markets are dropping, there's ways for us to make money on the way down. Right? We have the options I was talking about. There's bearish funds, there's ETFs, there's contra ETFs, there's leveraged ETFs. So there's a lot available for you instead of just biting your nails and hoping things get back up to your buy price. Not a good strategy. Hope is definitely not a strategy. But in this case, we have a strategy, and it's working very, very well. Just ask any of our members that have been with us for a while. So with that, I'd like to wish you a great weekend. Enjoy it with your family, and we will talk to you next week. Take care. Bye-bye.